Okay, everybody. So welcome back to the weekly Forex outlook and reviews. I know we're coming into the holiday periods now, but that doesn't stop us from trading, or certainly myself, and I'm sure a few of you out there. Now, we're going to take a look at 15 pairs today. The usual 15 pairs we took a look at last week, starting from pound USD all the way down to New Zealand Dollar JPY. Now, just taking a look at the news for next week, you can clearly see here that we are good to go. There's not going to be too much out there that should get in our way. So that will be very, very good for us. And in terms of the markets being closed, here we have a calendar of the London Stock Exchange market holidays. The only day that the market will really be closed fully is going to be on December the 31st, so New Year's Day, and here on the 1st, well, New Year's Eve into New Year's Day, and that's January the 1st. The market's actually open here till 12:30 and on the 24th till 12:30. So it's down to you if you want to trade, but I'm not going to be stopping personally. There's money to be made out there, and I'm keeping fresh for 2021 and making sure we're keeping our minds sharp. So let's take a look at the 15 pairs today. First pair we'll take a look at is on pound USD. First plans here is just to identify the directional bias of the market and then go from there in terms of making plans. By the looks of it, this is still more bullish than it is bearish. Clearly, we can see the market has been making higher highs and higher lows. Granted, it hasn't been the cleanest of structures. Clearly, we had been sitting in a range here for quite some time. I actually think I like the thin lines. I think it makes it look a lot more clearer, but we'll see how we get on with it. So yes, the market had been moving sideways. Now, we have a significant area here in the market where price was failing to break above, and that was for quite some time. And as you can clearly see here, we finally had the first break above, continuing this bullish sentiment to the upside, indicating pound strength and potentially dollar weakness. Now, looking at the structure of this market being bullish and seeing that price is breaking above structures, making new high highs and higher lows, it's safe to say that we should only be looking for continuation bias at this moment in time. Of course, we could be wrong. The market could rally to the downside. But in terms of trading with the trend and keeping our bias in line with the markets, it's safe to say that we're better off buying the markets in the long run as opposed to trying to sell them with no evidence of any sort of sell sentiment. So right now we can see it's bullish. We have the higher highs and we now have the higher low. For that reason, I would say we are at a significant area in the market where price was previously broken. We're now retesting this level, and you can see multiple wick rejections indicating a depletion in the bearish movement to the downside in these candles, and more of a bullish sentiment with these wick rejections. Does that mean we should buy here now? I doubt that that's going to be very likely. You have to understand when the market's open, we're going to have a gap down or a gap up, more often than not. So what we want to see the market do is just fill the gap, retest the structures again, or show signs of bullish sentiment. We see a level where price is failing to break above here. When we scale down to the lower time frames, you will start to identify this more as of a mini range from a lower time frame perspective. So what I would say to you to continue this bullish sentiment, what I would like to see is I would like to see the bullish momentum kick in again. And then once this happens, we can now start looking for our patterns. Now, that obviously is going to vary from trader to trader and depending on your strategy, but I'll be looking for the first signs of continued bullish sentiment before then looking for buys. Once I get that, I'll be using scaling down methods to look for retests, patterns, continuations. And if you're a high time frame trader, you could be looking for new retests of new structure highs, making new higher lows before seeing continuations to the upside. How high can pound go? Really don't know. But as I said, you're better off putting your money on buys, at least for the first 24 to 48 hours, if given the evidence, as opposed to anticipating the reversal. So this is how I analyze pound USD. So far, I gathered that pound seems to be much stronger than the dollar right now. And if the pound is not strong, then it's definitely showing that the dollar is weak. So we'll continue with that bias and take a look at some of the other pairs. So just to my members in the chat, does this make sense? Are you in agreement with me? Or do you have any questions on this one? Everybody good with pound USD? Okay, perfect. So let's take a look at the next pair. So let's take the thought process that we just gathered over there with pound USD. Now, as I said, pound doesn't necessarily need to be strong. It could just mean that the dollar is weak. And that would support what we see here on USD JPY. If the dollar was strong, then we would see more of a bullish sentiment over here. But we clearly see that it's not, it's more sell bias. So we'll get our directional bias for this pair on the board. So it's sell biased. The market is clearly making new lower lows and lower highs. So really clean structure here. Remember what I say, if the market is trending down and you have your brick wall in place, we're not using this as a trend line because we're not looking for immediate retest. There's so much more confluences you need to look for. But let's say you're looking to take some of these trades here. As long as your stop loss is above the brick wall, then you are good to take the trade, because in theory, if the momentum is down, structure is creating lower lows and lower highs, then the market should not break this brick wall and should continue down based on past history. With that being said, I'm not going to be looking for any reversals. I'm just going to be looking for a plan now to find out what would be suitable in terms of taking a trade. We can see we have our previous lower high that formed a new low here. And we see now we could call this a double top, even though we haven't tapped it, we still can call it a double top, or we can call it a lower high of this previous lower high. Now, when we sell the markets, we want to sell the markets once the markets have created an exhaustion, to then look for the retest, the lower high of the patterns for continuations down. And if the market is in a push phase, then we don't want to sell the market until the market exhausts. So at this stage, we can clearly see here the market is currently in a push phase. If the market is going to continue down, then it will break these structural lows to make a new lower low. And if the market is not planning to continue down just yet, then we could see the market pull back below this key level to create double tops, maybe potentially lower highs, before then continuing down. So with that thought process in mind, what we want to see the market do is one or two things: break this structural low, look for the retest of this structure, and then look for a continuation to the downside. Or because the market's already in a push phase, we want to see the market pulling back, staying below this key level here, creating new lower highs, double tops, or retest of previous structures, to then look for supporting evidence to sell this market back to the downside until we are proven wrong or otherwise. Maybe not wrong, proven otherwise. So that's my analysis on USD JPY. Does the chat agree with me? Okay, perfect. Thank you very much. The next pair that we'll take a look at is Euro USD. Taking a look at pound USD and USD JPY, we can see significant weakness in the dollar. This will support why the euro has been going up, or Euro USD has been going up, not necessarily euro, sorry, but why Euro USD has been going up. It's clear to say that this is a buy structure. We're making higher highs and higher lows. We did sit in a consolidation for a very long period of time, just like we saw on pound USD, but we have finally broken above this structure, indicating a continuation of this buy bias trend here. Now, what's the plans with this? Well, same thing really. We could argue that the market is in exhaustion phase, or we can argue that the market is still in a push phase and needs to exhaust. Whatever the case, we need evidence to take a trade, right? What we want to do when the structures look like this is we want to find an area where the market can first retest and stay above to confirm this bullish sentiment. I would say because of the consolidation and where price was failing to break above, and once price broke above, came back to retest or found significant bullish sentiment here, or pressure, or whatever you want to call it, I would say this is a level we can say for sure that as long as the market trades above this, we should be good to go for continued buys. Now, that being said, to make a plan to trade this, we could look for price to pull back to create a retest of this structure, looking for multiple wick rejections, indecision candles, looking for depletion in that bearish sentiment on the way back down, supporting this trend to the upside, and look for continuations. If we're not comfortable with the market pulling back this deep into the structure, then I think the best plan of action that I probably would more likely go for next week is just to see a break above this structure. Once given that evidence, I'll be looking for a retest and a potential continuation to the upside. Once I get this break from a higher time frame perspective, then I'll just be using scaling down methods to look for trading opportunities, looking for retracements, looking for patterns, looking for depletion in the retest bearish trends, and then looking for break of structures and then continuations to the upside. I think I personally will go with plan A, but it's not down to me. It's whatever the market does, as opposed to wait for the market to come back here. If the market comes back to this key level, you have to understand that the trend, especially from an intraday perspective, will be very bearish. So you all should know the plans. You'll be looking for those break of those trends on the lower time frames, new double bottoms, higher lows for continuations up. So that's my plan with Euro USD. And chat, you happy with this one? Does this make sense? I'm asking this just to make sure it does make sense, because if it doesn't, then obviously I'll have to elaborate. But if you're in agreement, then I'm happy. The next pair that we'll take a look at is Aussie Dollar USD. I mean, to be honest with you, this is something that we're really going to be working on in 2021 as a community, because obviously a lot of us are intraday traders. I know there's a lot of swing traders as well, but more so intraday traders. And we don't really we're not able to, or we don't really take advantage of, you know, these high time frame trends. But it's just the same theory, really. Look at the brick wall here that's been forming all the way up. Imagine getting into one of these trends. I mean, these don't come about often, right? But let's just say you got into one of these trends as part of an investment portfolio. Okay, more so, you know, for long-term trading, and, you know, just to build for the future, and you're able to get into one of these trades and just continue to trail all the way up above this brick wall. When the market starts to push up, you know, continue to trail and trail and trail up above this for as long as the market's going to move. Imagine the rewards that we can get from this with the least amount of effort and, you know, time invested to have to sit at the screens and watch the charts. You know, something we're going to be working on in 2021 for a fact, because a lot of these Sunday analysis that I do, I really do regret not taking the trades. So the market now has been moving up above the brick wall. We know that the dollar is not too strong right now, and we can see that the pound and the euro are a lot stronger than the dollar. That being said, I'm only going to be biased on this structure as well, seeing that the Aussie dollar has obviously been a lot more stronger. I know there was some positive news last week for them. Can't remember what for, but that's besides the point. And obviously we can see real strong move to the upside with hardly any strong pullbacks, just clean higher highs and higher lows. That being said, we need to work with a key level. We can see first things first that price was in a range. It finally broke above it. This range doesn't signify too much because the trend is really strong. But what I'm trying to work out now is, where is our retest level in this market? Well, the saying is, once price breaks, you look for the retest and then look for the continuation. I think this is a little bit premature with Aussie Dollar USD. I think that the significant level here is going to still be this structural low, because this structural higher low is what formed this new higher high. So in my personal opinion, the reason why I've drawn this level here is this: as long as price trades above this key level and then starts to give me signs of a continuation of this trend to the upside, I'll be more than happy to buy no matter what happens. If the market does not come back to this key level, then what I'm going to be looking for is for the market to break its current high. I'm not going to take this level here. I'm not really confident in it. So for that reason, I'll just avoid it, even if it does come back to retest it. And I think I'll keep to the simpler option, which is a clean break above this structure. And then I'll be looking for some of the retests and then the continuations here back to the upside. Now, obviously, a strong candle close above is significant evidence of bullish sentiment. And then you just use your scaling down methods to look for those trading opportunities. I think this is what I work with Aussie Dollar USD. I don't think there's much more to say about this one. Chat, are you in agreement with me? Okay. Thank you. The next pair, we'll take a look at a euro pound. So I get really excited looking at structures like this, because now I have to dig a little bit deeper into the market's structure and the behavior of the market. So first things first, let's just identify this clear trend to the upside, higher highs and higher lows, right? So if you look at the example that I just mentioned on our previous pair, I much prefer price to come back to a key level than to look for an immediate retest, which was around this level here, right? I don't want to look for the immediate retest here on Aussie Dollar USD. I said I would like it to come back to a key level. Look here. Once price broke above, I'm not looking for the immediate retest here. I'm looking for price to come back to a key level, because the theory is if price made the higher low, and that's what made the new high, then price is allowed to trade above this for as long as it wants before continuing up. So that's the same theory over there on Aussie Dollar USD, if anybody didn't understand. So we had this retest of this level, a continuation to the upside. We had a really strong gap in the market last week. You can clearly see the gap was filled, but then rejected. And then we've had a continuation or this continued move to the downside. So there's a few things we have to look at here. It's this gap down that supports a sell sentiment or sell pressure in the market, sell bias. Then we have price trying to fill this gap and failing to fill it with these multiple wick rejections. We then take our structural high and our structural lower high, and we now start to identify what could potentially be a new lower low, lower high formation. And then we support all of this with the new low low formation. So if we have a high, a low, a lower high, a fail to fill the gap, a bearish gap down, a break below structure, and a new low, the sentiment of this market right now is more bearish than it is bullish, even though we haven't broken this low. So I personally am telling you all this because if you still see this as buy bias, just understand the sentiment is more bearish. And there are more sellers right now in the market than there are buyers. Now, what we can look for next week is obviously more evidence of this, and how we can support that is by just working with structure, taking our lower high, which has now been formed off of the previous high, lower high, lower low, lower high, and saying to ourselves, as long as price trades below this key level here, we can continue to support or look for sells. Now, we do need to be careful of our ranges back down to some of these lows, because it's a significant level that price could bounce off of and then continue up if it wants to. Now, we're not keeping our options open here for anybody that just obviously can't expand their mind to understand what I'm saying. What we're saying right now is the SPY trend has not fully been violated because the structural low is still being supported. But the new form behavior with the gap, the lower low and the lower high, is more bearish than it is bullish. If price trades below this level, we can confirm a downtrend structure. But if price breaks above this level, then what we will support is the uptrend still, because this hasn't been violated, and then we'll need to reevaluate the new structure that may form once it's broken to then see if the market makes a high, higher low for then a continuation. Okay, that's obviously going to be maybe Tuesday, Wednesday, or it may even not happen at all. It may just continue to range. Somebody says, hasn't euro pound broken above the lower high? Euro pound, the lower high. So are you referring to the lower high being this here? Okay, no, Amir. So this is not the lower high, right? The way we have to look at structure is this way. At this moment in time, once the market creates these multiple wick rejections, we are going to be saying what? That the sentiment of the market is more bullish at this moment in time. So once the market breaks above this structure, what you're then doing is you're then scaling down, because if you're looking at current price action, scaling down to your lower time frames to support why you can buy at this level, right? So you would see that the market is creating what? An uptrend. But you have a significant level here on the market that price is failing to break above. So you can't buy it until it breaks above, because obviously it's clearly in the range. And once the market breaks above this structure for the first time in forever, you can now support why you can buy it at a retest of this level, like so, for then continuing to take these buys to the upside, like so. Okay, that's scaling down method. or that's the scaling down method in short. But from a higher time frame perspective, yes, we can see prices broken the scaling down area in the market where you could have taken buys. But remember, in theory, this is still a lower high of the previous structure that made this new low. Unless this gets broken, then the market is still more sell biased than it is buy bias. But what's happening here with this structure is because price has indicated what could be a lower high to support continued sells in what hasn't confirmed yet to be a sell structure, we only want to see the market go down at this point. If the market breaks above, because price has respected this level again in this buy structure, then we have to disregard this level and continue to focus then on the retest and then the continuation, which could be the higher high and higher low. Does this make sense? Does it make sense? Okay, fine. So as I said, when we come to this chart, I said, I'm really looking forward to breaking this one down because it's not clear. Someone said, is this a range? Well, we could call it a range, but you have to understand one thing here. And this is why I mentioned, if you plan to sell this new high, low, lower high, lower low, potential lower high structure, because of the key level and because the market hasn't confirmed a trend yet, we need to make sure if we sell, we have enough range back to this low. That's all. Okay, that's the only thing we need to consider in this situation, because it's clear we had the gap down. Price tried to fill the gap, failed, broke the previous low to make a new lower low, and now is forming what could be a high, lower low, lower high formation before making a new lower low. That's where the behavior is at. Okay, this is too difficult to trade, then let it go, but that's where the behavior is at. So anytime I'm planning to take a trade, I want to look at the structure, I want to look at the behavior, and I want to find the evidence and the confirmation that supports why I should take a trade. So here is the easier option. If the market is going to continue down, you look for the break retest to then support this structure. And if the market is retesting this structure and retesting this structure and not breaking it at all, then you will be looking for support and evidence of this structure, which would mean a break, retest, continuation. Okay? But for now, I'm only ever taking one bias, and my bias is sell bias. All the way back down to these lows, and better still, a break below, retest, and continuation. Does this make sense, chat? Thank you, Amir. Thank you, Jeremy. Thank you, everybody. Okay. Let's take a look at USD CAD. Now, we know that the dollar has not been bearing up too well against some of the other pairs. We can see here that the CAD has been selling off for a very long period of time, and we need to figure out what's happening. Now, with the structure of this market, I can clearly see we have a major low. That's the first thing I'm going to identify. I'm going to identify we had a major high where price was failing to break above, and then I'll look here and see what was happening for a while. Price was failing to break above this area here. Now, the way I see this is we have a structural high and a structural low, not really creating too much lower low, lower high formation. So we could safely say this was more rangy with no directional bias, even though you could pick some really great trades here. Then we went into another mini range after we broke these lows. We started to form a structural high we couldn't break and retesting it on 2 occasions, once formed, and then pushing back to the downside. The lows here weren't broken, indicating that obviously the market is not able to make new lower lows or continues to trend down. And then we had a really sharp rally to the upside. I'm not sure why, but we do. Now, for short-term behavior, we could safely go for buys if the market was open, let's say on a Tuesday or Wednesday. We have enough evidence to support that. But with the market opening on Sunday, we're going to have a gap up or a gap down, and we'll be gapping into range, this previous range or this previous range. So what would be my plans with this? I think with the evidence that we see, we could start to speculate that we could be reversing here. But for that, we're going to need more evidence. I think for sell bias, we could look at this key level here, not to sell immediately, because remember the immediate behavior into this level is going to be really strong bullish or bullish, whatever. We'll need to see a depletion of this bullish trend, especially from an intraday perspective, and then look for those new structures to form. If the market is going to break above this structure next week, then there's a lot to support a potential reversal in play. I think that I'm working on this one too hard. Even though this one looked like I was working on it too hard, the behavior was very clear to see here or identify here. With here, it's not. Let me keep this super simple before I give it the red flag. Structural high, structural low in this instance. Key level, we've just broken above here. And now I would say my first plan is to see how the market gets back to this level. If we respect it, then I'll look for a behavioral change and look for new signs of potential structural change back to the downside. If we break above it, then I'll be anticipating the reversal. Once given the evidence of confirmation, I say anticipating, I wouldn't call it anticipating, but I'll definitely start looking for the reversal. And then for sells, there's no way I'm going to continue the sell by structure and start selling in this range. We'll just need to clearly break these lows and look for these retests. This has got a lot of building to do before I'm confident in saying which direction I'm going. We'll leave USD Cad as is for now. I mean, the reason why as well, if the market is clearly trending, making lower lows, lower highs, then personally, you know, we can't identify a directional bias here. Why try to make something of nothing, if you know what I mean? Based just on off of your question here, Mahmood, yes, you could from a pattern perspective, but in terms of the higher time frame, I'm not sure that this is something that's going to be feasible when the market opens on Sunday with the gaps and whatever else. Okay, but you can imagine it for sure. Yeah, and for the lower time frame as well. Yes. So chat, does this make sense why we've come to this conclusion on USD Cad? Yeah, Max, I think that was a really good statement you made there. USD Cad looks premature. Give it 2 to 3 days to build up. Absolutely. Absolutely. Great advice there, bro. So Euro Aussie dollar, I don't think we need to spend too much time on this one. We can clearly see that the market is ranging structural highs, structural lows. Let's look for a clear directional bias. Now, remember this. The euro's been strong. Aussie dollar has had some good news. And, good news. And when you bring two strong pairs together, guess what happens? The market consolidates. Okay. In order for the market to go down, you need a stronger currency. In order for the market to go up, you need a stronger currency. Or one needs to be weaker than the other or stronger than the other. Right now, they're both strong. And for that reason, we're ranging. So we'll wait to see who wins this battle. And then we'll look for some trades. Next pair we'll take a look at is Pound JPY. Now, to be honest with you, this structure has been awful for a very, very long period of time. I'm not sure that I'd be able to keep this on my list. I probably don't think that it's going to be tradable at this moment in time until probably New Year from a 4H perspective. So anybody who's trading GJ, I think it'll be wise to use some scaling down methods here for intraday trading or scalping, whatever approach that you're using, because I mean, this is, I guess, a trend trader or a swing trader's nightmare. Too many ranges, too many key levels, too many wick rejections. I think from a 4H perspective, GJ is getting the red flag. The next pair that we'll take a look at is Euro JPY. Now, we can clearly see this is also ranging. How would I draw my range? Would I view this as a breakout? Well, could have if price didn't break back in. But because price has broken back in, we're not going to disregard the market's behavior up and around these levels here, around, what is this, 126.86. So we're just going to safely say this is still in the range until the market tells us otherwise. The next pair that we'll take a look at is New Zealand Dollar USD. We can clearly see that this structure of the market has been pushing up for a very, very long period of time. We had a deep pullback over here previously that could have started to show signs of a potential reversal or bull stepping back into the market. But remember what I said, when we're taking key levels, you want to identify the level that created the higher low and then look for levels that created the new highs. Now, it doesn't take a brain scientist to recognize that this is a new higher low as well. But did we really make a new high? We didn't. And that's why at this stage, we could have anticipated what could have been a reversal or a depletion in this bullish sentiment. So we'll take a significant level, which is the level that did make the new high, and we'll just drag it across. And what do we say to ourselves? Well, as long as price trades above this level, we can still safely look for buys. So if we look at this brick wall and you may see it as being broken, also identify as well a level where price is respecting or made the new significant high after the higher low. Then you take the structural high and you say to yourself at this point, well, fine, if the market breaks these structures, creates new lower highs and breaks, we can confirm the reversal. If price trades above it, we can confirm the buy bias. And if price creates two taps, then what can we confirm? Well, we can confirm a potential range until the market breaks again, either to the upside or downside, and then gives us a directional bias, right? This is how we look at it. So we can see that the market is continuing to respect structure, making new higher highs and higher lows. Now, at this stage, the market has just repeated exactly what it's done over here. It's finally broken above the structure. And as we can see, it looks like it's respecting structure. Now, personally, I would not be buying off of this level, especially from a 4H perspective, maybe scaling down. Last week, we could have looked for some opportunities if given the evidence. We have structural down, level created, level respected, potential higher low, higher high formations. I think we can scale down to the 5 minute to look for trades. 15 minutes gave us a lot of evidence there, but we're not going to go into too much details about that. You all should know. I would say there's a couple of things to think about. What is the significant level that made the high? This one. As long as price trades above this level, we're still good for buys. And I would say, just to be safe rather than sorry, you don't really want to take this retest now because the gap ups or gaps down. I would remove it and say, well, look, if price leaves, pushes up, then comes back down, then you potentially could look at this as a significant level, okay? But I think my plan would be this, is I would just wait for the market to break above these structures here to confirm that bullish sentiment. As we're in the middle, no trading, wait for the break of this structure, retest of this structure, and then look for the continuation. And that's my analysis on New Zealand Dollar USD. Are we still buy bias if we form lower lows and lower highs back to support? Good question, Amir. If the market comes back to these levels and creates lower lows and lower highs, you, from a higher time frame perspective, you are still by bias because price is trading above the key level. But you should know this from, what you have access to, Amir. You will be waiting for a behavioral change and a structural change by using the scaling down methods to then support that the bulls are back in control of the market. Okay, hopefully that answers your question. That was a very good point that you just made there. Yeah, I think I'm very happy with that. Chat, does this make sense? And are you in agreement with me on this one? All right, Max, thank you, bro. The next pair that we'll take a look at is Euro New Zealand Dollar. Wow. The structure of this market is pretty incredible, huh? Okay. First things first, we were pushing to the upside, okay? The market created a new higher high and what could have been a new higher low, okay? Significant levels at this point are a structural high to anticipate the new higher high, and failure to make the new higher high and starting to break some of these lows here would indicate potential sell sentiment. Now, what we want to look at, again, back to the theory, is a significant level where price is allowed to trade above. This answers a mere question as well. What would we say if the market makes new lower highs, breaks of structures, and new lower lows on the way back down? Well, you look for supporting evidence of this, scaling down to, let's say, an hourly time frame. You're going to see the market making its new trend on the way down. And then to support buys, what you would say to yourself is this: if this is a lower high, and lower high, you expect price to trade below this key level here. This is a significant level. If price breaks above these structures here to support this higher time frame analysis of being buy bias, you look for this to deplete, which is your bearish sentiment, and then you scale down to your lower time frames to look for now what would be a downtrend, switch to an uptrend, look for your double bottom patterns, and then what would you do? You'd look to take your trade, something like this, with your stop loss below structure, only targeting some of these new highs here, just in case price doesn't come back, and only then can you take a trade. Amir, does this make sense? Just to answer your question. A lot of sense. Okay, my bro. So that's how we would do it. A little bit of love for everybody that's going to watch that, but that's how you would trade this if it does make new low lows and low highs on the way back down. Okay. So where was we? So the market was pushing to the upside. We have a significant level we need to look at here where price, oh, this is why it didn't make sense. Okay. Where price is allowed to trade above. Then we take the major high, which could be the potential lower high to make the new lower low, which in theory, is this really a break? I mean, look, once price breaks this structure, you're going to be looking around here. Once price breaks the structure, you're going to ask, is this a clear break or do I need a bit more evidence? All right, simple. Now, once the market starts to form more candles moving side by side, what do? Well, you just take this area here. You don't be a donut. You just take this area here. You don't try to be the first in the markets. You're only looking for clear trades to take, okay? The market is doing what? It's not breaking the lows. It looked like it broke the low, but it didn't break the low. The uptrend has indicated a potential reversal. It did start moving down for a little bit, but the market is struggling. Then we take our highs, we draw it to the left, and we say to ourselves, well, what directional bias is this market? Is it trending up or is it trending down? The answer is clearly neither. It's moving sideways. So do we want to take this high as a level to say, well, if price breaks above this, I'm buying? Well, no, we don't. What we want to look at is the major high, where if we did buy, if it broke that structure, where it could react to and cause us problems. So to be safe, rather than sorry, I'm going to be waiting for the market to take out the highs or take out the lows to then look for a potential trading opportunity on Euro New Zealand dollar. Does this make sense, chat? Okay. The next pair that we'll take a look at is gold. Now, gold. Let's take a look at gold. So the structure of this market right now in terms of a bias, I mean, I don't support this structure as being buy bias, to be honest with you. I mean, geez, this hasn't really been trending too nicely for a while, has it? Okay, so there's some factors I'll consider here. A major key level that we've just mentioned on our previous pair, Euro New Zealand dollar, and a major key level here. We don't want to use this as a significant level just because we see price reacting, because price can come back to these highs, just as I've mentioned over here. So what we do is we mark this structural high as a significant level. If price breaks above it, then that's obviously indicating to us strong bullish sentiment, right? Period. Regardless of a clear trend, bullish sentiment. You then identify an area where price is failing to break above, and now you start to work out the behavior. The previous behavior before that was, I wouldn't call a down uptrend just yet, but you know, it was off of the back of this lower low, lower high, and then we finally had the break of this structure. So now this is indicating to us what could be a retest of the previous lower high to see the new lower low. And with the break above it and price trading above it, supporting what could be the sign of a potential reversal and continuations to the upside. With that support, we have the break, we have a level created, we have a level respected, again, as a double bottom pattern. So you'd expect what for the market to do? Make a new higher high. Once price makes a new higher high, you expect the market to pull back to make a new higher low, or a retest of structure, which could be something like this. Or if it doesn't, and it does some madness like this, then as long as it trades above this, you'll still buy bias. Once the market creates a key level and doesn't break below it, you have to continue a buy bias sentiment until the market creates a new structural high lower high and a lower low formation, which you can clearly see it did, but never made the new low, meaning that this market is still more bullish than it is bearish at this moment in time. And then what are you doing looking for? You're looking for the market to support this bullish sentiment by breaking above key levels in the market to then look for continuations to the upside. Once you get that break, you have that confirmation of bullish sentiment. What are you then waiting for? Well, you're looking for the market to come back and retest structure, create multiple wick rejections in and around these levels here. Something like this. That wick wouldn't have been there, so let's not pretend it was, but let's just say something like this, and then you'll go for your 1 to 3 targets, just working with behavior and structure. Now, why am I doing this? Well, I'm trying to figure out where the behavior of the market is right now, and I found it. It's more bullish than it is bearish, even though it's not clear. I see prices broken above this high again. What would I suspect? I suspect the market to come back to these levels to retest before continuing up. Am I happy with the fact that the market has been ranging like this? Not really. So what I would prefer is for continued buys on this market structure, is for price to trade above the higher low, forget about the retest level, focus more on price pulling back for a true retest of this structure. Let's remove this one. And then looking for a continuation. Now, even if it doesn't retest and it goes into a range, what I'm avoid doing is taking sells in a buy structure and allowing myself to be patient enough for the market to breathe, especially from a high time frame perspective. Okay, this would be the first retest, but just as we mentioned, I just shared an example of how you could trade that. My better option or plan would be come on bulls, take back over, continue up, show us that you're in the markets, and then we'll jump in once you break above retest and we'll look for that continuation up. And that's my bias on gold. Does this make sense, everybody? Any gold fanatics traders out there that would disagree with me here? Okay, perfect. The next pair we'll take a look at is Aussie Dollar JPY. Now, does any of you identify something here? With pairs like Pound JPY, Euro JPY, Aussie Dollar JPY, for the majority of them, they're all ranging. Why is that? Well, Pound is showing signs of strength. Euro is showing signs of strength. Aussie Dollar is showing signs of strength. And JPY is showing signs of strength. And what is not showing signs of strength? Dollar. So yen is strong. Pound and yen are strong, ranging. Euro yen is strong, ranging. And now what do we see? Aussie dollar is strong, and Aussie dollar JPY are both strong currencies. And what is it doing? Ranging. Now, my question is this: why do you need fundamentals when you can just focus on price action and identifying by going through your pairs the behavior and the strengths of the markets for its structure? I mean, it's a true, in my opinion, it's just a beautiful craft, and it's just art. I love the candles, I love structure, I love behavior. It's just art, and I just want to share this with you, ladies and gents. I don't know why I said that, because I'm not going to say boys and girls, am I? But family, listen, if you can identify the strength of a currency more often than not when it's dominant and predominant in the markets, you can be sure to trade with that currency only. Forget the pair, the currency only, and more often than not, excuse me, and more often than not, be right. Getting some really good trades and in the right side of the market. And this is where your trading is just going to level up. So anybody who has Aussie Dollar JPY, you know, as part of their watch list, why would you want to guess it's going to reverse from this key level? Or why would you want to take sells or buys and be the first person into this market when we all know from what we gathered and can see, Aussie dollar is strong, JPY is strong. What usually happens when you bring two strong currency pairs together, it ranges. Wait for one of them to weaken, wait for something to happen, wait for some news to come out. Once you get price action indicating a directional bias again, then guess what? Take a trade. Why did this rally up? As I said, they had good news for the majority of this month. That's why it's moved up. It doesn't necessarily mean that the Aussie dollar is stronger. It just means that at that moment in time, there was news that supported this movement. And then we go straight back into a range. Okay. So for that reason, I have no bias on this. We'll just wait until next week or the week after or whenever it wants to do it. I don't really care. There's so many other pairs to trade, but for now, we'll just wait. Does that make sense, chat? Amongst all my clearing my throat and coughing. Yes, absolutely true, Max. All the fundamentals are reflected into the currencies and associated candles. So if you're able to gather that data through a process of elimination, going through the pairs, identifying the structures, etc., you can gather it. And I can promise you, it will support your trading and your results will just literally start to go through the roof. It also support why you can hold trades. It also support why you should cut trades. So much you can gather just through price action without having to become an economist. You know what I mean? Next pair that we take a look at, and I believe the last pair, two more, USD, Swiss franc. Again, easy to identify dollar weakness. The market has continued to push down. We're not going to spend too much more time on this. We can clearly see that this is obviously making lower lows and lower highs. Now, if you know how to trade this, then obviously, by all means, go ahead and trade it. You're not really going to be able to trade from a higher time frame perspective and get the best entries here. You could obviously, if you're able to scale down to hourlies, 15 minutes, 30 minutes, 5 minutes to support some really good entries here. But if not, it's probably best to identify this as a slow moving market in a downtrend and just wait for it to clear up. To be honest, Swiss franc is just not a pair I really like to trade ever. When it trends, but when it doesn't, it just doesn't. I just say if you're looking for a directional bias, it is down. There is a significant level. Prices have broke for a long time. You would need this to break first before then looking for any retests or continuations. Pretty boring pair to analyze, to be honest with you, at this moment in time. But this is the plan. It doesn't need to be difficult. That's the plan. Do I focus on correlation pairs? No, I don't focus. I just trade structure. Doesn't matter to me. I used to in the past, but as I've become a more experienced trader, I don't need to focus on it. Guys and ladies, I just literally focus on structure, on market behavior, and I just jump in the trades the minute I can identify momentum. It doesn't matter what correlates and doesn't correlate. And I only trade GU at the moment, so there's no need for me to have to worry about that, obviously, as well. Do you monitor currency strength on the lower timeframes too? No. So in terms of currency strength on the lower timeframes, I don't need to monitor it because when you go down to the lower timeframes, the trend on USD Swiss franc could be down in the lower timeframes, but I could be buying all day long because that's where the behavior is at that moment in time. You know what I mean? What I focus on, again, is just simply the market structure that's formed, the behavior that's building up, the momentum that's entering the markets, and then the patterns that support why I should be taking a trade in that direction. So no is the answer to that question. Final pair we take a look at is New Zealand Dollar JPY, and this made my life easier. We are in a range. It's ranging. USD Swiss franc and New Zealand Dollar JPY, we're ranging. Okay, very simple. That's 15 pairs there, family. I hope you enjoyed that. All the best with your trading next week. Happy holidays, happy new year, and until next time, take care.